Hello everyone, welcome to this week's watch list preview. Um, Keep in mind we're really potentially top heavy here. Just be careful with stops, especially with what's going on with the news right now. Won't take much to bring this market down a few notches. So I'm not telling you guys what to do, but I know I'm not going to sit and ride out a pullback, especially if it's news driven. I'm going to get out of everything except for my IRA stuff that's long term with they're commons with no expirations. Those I'll ride out and I'll just add to them when we pull back. But as far as my day trading account, any bad news hits, I'm getting out of everything, no matter where we're at on this. It hit Friday or Thursday, whatever day that was. It hit everything, pulled back, and it bounced right back up. But there's no guarantees that's going to happen. We're really top heavy, so um, it might take it might not take much to see a 5 or 10% correction. So just I'm always conservative. I always try to be extra careful and extra safe, extra cautious. So I'll be keeping tight stops and trying to be real careful with it here. We had a lot of inside weeks, a lot of stuff on the inside week scan. The Some of them I was, examples Disney. Disney was an inside week, but I'll show you the Disney chart here in a minute. Disney has a lot of mother bar issues. I get the drink here, and I'll show you what I mean by that, and why it's not on my list. Normally, Disney would be on my list if we have an inside week, but look at this. This is the weekly chart. We've been stuck in this range for we won't even count this. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15 weeks. That's almost 4 months that we're stuck in this range. Granted, it's a $20 range, but still, look at all this chop. You got a 2 up. Okay, I'm going to get in here. Oh no, let's go back down. Let's go back down some more. All right, we got an inside. Okay, we broke to the downside. Let's jump in right here. Oops, never mind. We're going to bounce back up. Oh, look, we have what's that? Dragonfly, not even Dragonfly Doji. It's not really a hammer, but either way. Okay, look. Oh no, that's a shooting star. There's just a lot of confusion here. Nobody knows what to do with it. So that's why it's not on my list. If you look at it on the monthly chart, look at this. Since this candle here, we have an inside, we have an outside, and we have a 2 up. But look how small the bodies are. That just means there's a lot of chop and a lot of indecision. So that's why it's not on my list. There's a bunch of other ones that were on the scan that were similar to this, and that's why I don't put them on my list. Some of you might say, "Hey, what about this one? I saw it on the inside week." Yeah, but take a look at this. In my mind, we need to break below, at a minimum, need to break below this level here, or even better, this level here, or we need to break above. A break above this level would be okay because we have the potential to come up here, but ideally, I want to see a break above this. So that's why I don't put some of these on my list. Okay, let's take a look at Apple. We have an inside week. It's similar to Disney. It's had a lot of inside movement. But if you look at the monthly, we've been going 2 up, 2 up, 2 up. So it's slowly grinding up. It's not necessarily stuck inside, but it's slowly grinding up. And these markings here, I put this on my inside quarter up back in what was the end of June, and I'll cover that when the quarter's over. The end of this month, the end of September, I think the end of this quarter's over. But I had this on my inside or my quarterly watch list, and you see what we did there. We broke target 1, and I don't know what target 2 was, but we may have broke it to inside. It was inside week up. That's target for this week. Okay, so I have it on the inside week. I'm trying to make this video a little bit shorter. little bit quicker. That's the monthly. Here's the weekly. If you want to go even further out, look at the yearly, 2 up, quarterly, 2 up. Everything looks good on the Apple chart. The only thing that's not real good is the most recent weeks. Since here, we've been kind of just slightly grinding higher. We do have some bigger bodies here, so it's still moving. This one, this one, this one, this one. But right here we have a spinning top right in the middle of the previous candle. So it could go either direction, but given the yearly, quarterly, monthly, I'm going to look for the upside. Doesn't mean it can't go to the downside. But I think if it does, I may just, unless everything turns to the downside, I'm just going to let this go until it wants to bounce back up and then get back in. Not that I don't like playing puts. I just like to play with momentum, and right now the momentum on it is to the upside. So our trigger is a break above the inside candle here. A 3 candle is automatically a broadening formation on a smaller time frame. So you look at the broadening formation I created here. If you come down to the daily, you see, and they don't quite match up perfectly when you do these, but you can see right here is your 3 candle. Went from here to this candle, and from this candle back to these candles. But like I said, when you change time frames, they're not perfect. They get skewed a little bit. So anyway, we're looking for a break above the inside of this or the top of this candle, 150.86. Target one is 151.68. You look at the daily chart, and that's your all-time high. And you can see I put here on this. After that, look for the top of the broadening formation for an exit. That may put you, your trigger is not till way up here. So you have a $2.50 move before you even hit your trigger. If you're looking at, maybe Wednesday when this thing hits the top of the broadening formation, you're probably at 153, something like that. So that's a good, nice $3 move, $2 to $3 move from the trigger. If you wanted to be aggressive, you could jump in right here on a break above this. But I found it works best if you stick with following the weekly chart. It's a little bit more consistent on the weekly chart than it is the daily chart, which I think is common with just about anything, any system. So again, like I've said in the last few videos, you can look for a couple different ways to exit. Look for a break, or look for it to come up and get close to the top of the broadening formation. I wouldn't even look for a touch. I'd look for it to get close, and that would be my exit. Another one would be look for maybe on the 60, look for a close below the 9 EMA. And I say close. I don't usually use close, but for the 9 EMA, I say look for a close because, look what happened here. This is the 21 EMA, but look what happened here. Same with this one. We'll come down and we'll pierce it and shoot right back up. They like to do that a lot on the EMAs. That's why I look for a close. Now you have to have some stop in there. So let's say, you come down below the 9 EMA here and you just keep on going down. At some point you have to get out. Like let's say this one here. You need to say, okay, I need to have some stop here. I'm not going to ride it all the way down because it could be a day where we lose 800 points on the Dow. And you don't want to just ride it all the way down. So use some common sense and judgment there. But in general, I like to look for a close below the 9 EMA. The other one is look for a reversal. Look for a reversal on maybe the 2 hour. Reversal would be, right here. We had this big up candle. We're still 2 up. We're still 2 up again. And now we came down. We broke the low of this candle. That's your exit. So 3 different ways to look for an exit. It really depends. If you're way up here, look where your 9 EMA is. I wouldn't use a 9 EMA as a stop. You're going to give up a lot of ground here if you're looking for the 9 EMA when you're this high. If you had a broadening formation right here, then yeah, get out with the broadening formation. If you want to be a little bit more aggressive and try to ride it, see if it breaks that broadening formation, that's fine too. Use your reversal candle, which would be right here, a 2 down. Look for that for an exit. So that's what I'm looking for Apple. Caterpillar. Look at the yearly. It started out really good. It's been pulling back though. Quarterly, not so good on the quarter. Two up followed by two down. Two up red, which is conflict, followed by two down. But we came down. We're bouncing back up. Monthly, we have a 3 followed by a 2 down, followed by a 2 up, although it has pulled back. Then you look at the weekly. Weekly, we're kind of like sort of like that Disney chart. We're kind of bouncing around here, but we came down. We're off the bottom of this broadening formation here, which we did break it, and we created a new broadening formation down here. But this one still may offer some support. We came down close to that broadening formation and back up. If we break this high of the inside candle, we're going to be above both EMAs, the 9 and 21. And that's why I like this one as opposed to, say, Disney. If we break it, we're going to be breaking the high of the inside candle and above both EMAs. So that's why I do like this one. You look at the weekly, our triggers above 215.70. Come down to the daily. We have, it's almost a pivot machine gun here. Not quite. I mean, if you go all the way down to here, it's pivot machine gun. So actually the pivot machine gun would have started here. But, it wasn't, we did have an inside week here. This is actually an inside day. You could have traded it off of this and been looking for a pull all the way back up to the highs. But nonetheless, you're looking for a break above the inside candle on the week, which is this here. Target 1's going to be the high of this candle at 216.39. Target 2, 218, the high of this candle. Target 3, 220.55. Don't know why that sells there. I must have some kind of an indicator set on this. Target 3 is 220.55. Target 4's, I guess, its all-time high is at 223.76. I don't know what this... why that sell? Oh, I know what it is. I have this up here. Something I used to do. It's related to Ichimoku Cloud. I was messing around and had it on there. So that's what I'm looking at for Caterpillar. Yeah, I used to trade Ichimoku Cloud. What I didn't like about it is if it's not a trending chart, it doesn't work very well. Not saying it's a bad system, but Costco. Looks really great on the year, really great on the quarter, really good on the month, and now we have an inside week. What I don't like is look how far away we are from the 9 EMA. We're $15 away from the 9 EMA. So we may see some pullback back down closer to here, kind of like you did over here. Not necessarily pullback here, but it just kind of consolidated till the 9 EMA caught up to it, and then it took off. So we may see some of that. This one here, look what happened. We had an inside candle, very similar to what we're looking at here. We had an inside candle. Actually, this is following a red candle, so it's not as good. This one here, we had a nice green candle, followed by an inside candle, followed by another week of nothing, and then it took off once it broke above these highs here. So be careful of that. You have to watch for that. But and this is a red candle. I know it's yellow, but it's a red candle. It's solid, which means it closed lower than it opened. So it's a bearish candle. I shouldn't say bearish candle. It's more bearish than it is bullish. Let's put it that way. It's an inside candle, but it's more bearish than bullish. So we may break below this and come down till it gets close to the 9 EMA, or we may just consolidate sideways till the 9 EMA catches up with it. However, if we do break above it, I'm looking to get in at the break is 459.06. Go to the daily. We're looking at highs of 460.62 for target. Again, after that, start looking at either the top of the broadening formation, or you can look for 9 EMA on, say, the 60 or the 2 hour. We're below it on the 60. Maybe the 2 hour, because if we trigger, we're going to be way up here. So we're going to be way above the 9 EMA on the 60 or the 2 hour. Or better yet, what I like is look for a reversal candle. For example, right here, you get in, you're still in, you're still in, you're still in, two up, you're still in, inside, you're still in, two up, you're still in, two up, you're still in, two up, you're still in, and then once you break below this, you're out. These are either twos or ones the whole way up till we get here. Then we actually went three. It could be a two down. Same with this. Maybe you got in right here on the break of this inside candle. You're still in unless you took your profits. You're still in. Once you break below this, you're out. So that's what I'm looking at for Costco. FedEx, ugly looking chart. On the year, we're kind of a spinning top on a year. On a quarter, we're two down on a quarter, looking weak. On the month, we've had a couple two downs in a row, not looking good there. On the week, really ugly. We had a big three candle here, followed by an inside candle, doji candle. We're looking for. I'm not looking for anything long on this one. This chart's so weak. I wouldn't. I need a lot more before I'd be going long on this one. So we're looking for a break below 266.30. Look at the daily for targets. I have to zoom out so I can go back far enough. The first target is going to be this low here, which is 264.07, which is a little over $2 move. The second target is going to be this one of 263.94. The first target's a low of this candle. Second target is actually second target, you have to come all the way over here. Low of this candle, it's a pivot low here. Third target, actually the second target was this one here. Third target was this one here, 257.09. So that's what I'm looking at for FedEx. Really weak looking chart. Nike. I'm trying to hurry up here so this isn't too long. Nice on the year. Nice on the quarter. It's two up, but it's kind of unsure on the month so far. On the week, we have inside week. We kind of pulled back close to the 90 MA inside week. So we're looking for a break above this inside week. 170.90 is your target or your trigger. Go to the daily. You're looking at 172.40 for target 1. 174.36 for target 2. And then after that, if you want to continue, watch for the top of the broadening formation or a reversal candle. QCOM. On the year, not great. It's two up, but not real pretty. On the quarter, it's a two up, but it's spinning top. On the month, two up, but it's red. We're kind of riding this 90 MA. On the week, kind of looking like we may want to bounce back up at least to these highs, recent highs here. So I'm looking for break above 145.59 for an entry. Come down to the daily. 147's target 1. This could be target 2, but it's pretty close to this one, so I'm going to go with this one at 149.31. Keep this candle in mind, though. You may get to that and start to see some slowing, but I still think we would hit this one if we get to this one. So 149.31 and then 152.28 for target 3. Last one is ExxonMobil. I'm not a big fan of playing the oils, but let's see. Inside on the year, on the quarter, we're two down. On the month, we're two down. On the week, we still not. We're kind of. It's an inside candle, but it's to the upside, real close to the top of the previous candle. So I'm going to look for that. I probably won't trade this, but I want to put it out there. Break above 56.21. Target 1 is going to be the high of this candle here, which is 57.07, then 57.79, then 58.50, and then 59.33. So that's what I'm looking at for this week. Good luck. Hope you guys killed it last week on the Qs and square. Those two really blasted off. So hope you guys caught some of that, and good luck this week. Thanks for watching, and I'll see you guys later this week. Thanks. Bye.